Here we are. We're live. And look at this. We got a different format. We don't want to freak everyone out. But you know what? We're doing this. We're putting Richard and I over here. And we've got our special guest. I'll introduce our guest in just a moment. But we couldn't do three people hosting at once.
No.
Why are you such a cheapskate? Why don't you pay for a higher subscription level?
Because that's how you lose money.
All right. Yeah, let's just get oriented here. Can everyone hear us? Just let us know if we can if we can hear everybody over there. So
Sure.
let's see here.
I'm not sure how many people are here yet.
Yeah, let's just see. It's coming up as Shane, but of course that's going to be Shane and Richard. Let's just update this. So our timing, again, is a bit off. We normally do things at 3 p.m. Central European time, which is our time zone, but we had daylight savings that screwed things up. The email went out that it was 1300 UTC. So we'll just wait for some more people to come on board and join us. Hopefully we will. I think this really screwed everyone up.
Yeah.
But that's okay. And for those who do miss it, of course, we'll have the recording. So let me know, please, anyone, if you can hear us. And that's published. Let me just. Oh, we can just put up. We should have this up to begin with. That's okay. Yeah. All right. We'll just leave this up for a minute while some more people join us. Hopefully, we'll get some more people on. It's a bit disappointing. All right. In the meantime, we've got a special guest. A guest from Deribit, no less. Would you like to introduce yourself and to give us a bit of background on what you do at Deribit, where you come from, why on earth they gave you the job there? Like, what are your qualifications? Why are you there? Tell us. Give us everything.
Yeah, why did they give me this job? I don't know. No. Okay, let's be serious. I have been a market maker since quite some time. I started at the options exchange in Amsterdam, which was actually the best part of my professional life, I would say, the mess on the exchange. But okay, later on we went to automate. We went automating all stuff, and that was less interesting for me. So I decided to move further, entered the energy trading business. So like electricity, coal, carbon, gas, and in the options. And of course, there I met my great friends Enron. They made a mess of this market. But I stayed into energy trading up to 2013. Then I decided that was already a long time in my head to write a book on options. There are many books on options, but I thought I can do this differently. So I wrote my book, which was with what I was kind of happy with, published by Wiley in 2015. And then I decided to go back into the market. And I was trading equity options again, in index options, but not completely happy with it anymore. And then I got approached by Deribit. And actually, they offered me a risk role, and I had something like risk. I don't know if I want to do that, but at the same time, it's also a very creative role. So it's about thinking of new models. I've also implemented the default futures we have currently. I'm working on improvement of our mark prices. So for me, Deribit is it's a nice challenge, and it's a very creative job. So I really love it, and options, options. That's everything for me. I really like the options. I really like to philosophize about it. Where the three of us, we all have different approaches towards options. So yeah, happy to be here. Thank you.
What's the name of your book?
It's a long name. How to calculate option prices and their Greeks.
Okay.
Published in 2015 by Wiley. And then it's exploring the Greeks from Delta to Vega or something. But no, the first title, How to Calculate Options and the Greeks, that's actually the main title.
I wish we'd known that we could have put a link, an Amazon link to it.
Oh, you don't have it?
No.
You haven't read it? Okay.
No, if you have the link handy, we can throw it into the chat, and then people can see it if they want to purchase it or something.
I don't have it here, unfortunately.
I imagine it's the kind of book you'd read before you go to bed to help you fall asleep.
Yeah. You might fall asleep. That's no. To put it very frankly, if you're not very familiar with options, then the Bible in options is Nathan Burke. I think Nathan Burke is the best. You can start reading dynamic hedging from Taleb, but after that one, then you might understand my book. But my book is in general considered as being too complex. Well, I actually try to keep it as simple as possible. People with experience, they think, okay, this is really good, a good read. But if you don't have the experience, then and you want to read about options, go to Nathan Burke, and that should become your basis.
So I think what we're going to do is we'll give you our address afterwards, and we'll expect a signed copy, right?
Yeah, sure.
Yeah, sure. Yeah. I'll sign anything.
We'll make sure all our members get a link so they can.
Yeah, that'd be great. All right. So, well, Reno, we had you on because we wanted to chat about what's going on in the current market. Now, we had a pretty dull year up until the end of the summer. Things were quite flat. We're in the summer doldrums. We knew that this ETF approval stuff was on the horizon in the new year, and things got volatile quick. I mean, well, we saw vols, IV was 30, 31, 32. It was the lowest we'd ever seen it. Yeah. We knew it was going to change. We didn't know how fast or how explosive or how high. And now we're ripping around. We've got fake news. We've got real news. And I think a lot of people, I mean, you always in the crypto space, you've got the hodlers. You've got the people who think Bitcoin's going to 1 million. They're always going to have that crowd. And you've got the other crowd who think it's going to 0. And sometimes I think it's a little tough to discern the truth. And, there's the old adage in the markets, buy the rumor, sell the news. Everybody knew this Bitcoin thing was probably going to get approved for ETF. We got the fake news came out, or the false news. It went up and down. And then we started seeing that strength. And we kind of were expecting strength going into the new year. We didn't know if it'd be a lot of sub moves, a gradual move. The market tends to move in ways where the average person has a hard time jumping in and taking advantage. They don't make it easy or obvious usually. So I guess let's talk about that for all the Deribit traders or any trader that watches this, and they're thinking, well, we've got this Ethereum and Bitcoin ETF on the horizon for approval by the SEC in the new year. What can we expect? Do you think the prices are going to keep going up? And how do you think we're going to get there? If they do you think it's all built in? Or we're going to pull back? And then let's talk about some strategies for maybe playing it, because we don't know. We don't know what's going to happen. We can have our hunches, and maybe let's share some strategies that maybe people could employ themselves to take advantage of this.
Yeah. I fully understand what you're saying, because that's always the difficulty. Buy the rumor, sell the fact, or the move in the rumor is not even half the move after the fact. So that's always, I always found that very, very complicated. And okay, let's see what happened in past year. We had the FTX debacle. Prices went to 15K. We didn't move. We saw volatilities already around the 30% area. And then suddenly in January, we had 2 weeks where we moved up simply from 15K to 22, 23K in BTC. And that was already, wow, volatility shot up. So everybody became more positive, more enthusiastic about the crypto complex, and then we had a period that nothing happened. But currently, there is so much imagination in this market. But if you think of it, if a company like BlackRock is trading ETFs on ETH and BTC. This firm is huge, and I can imagine that a lot of people are staying away from this market because it's not really a regulated market. You can do some stuff on the CME, okay, but if you enter into an ETF position with BlackRock, then most probably some institutional companies are suddenly allowed to enter the crypto business, which they weren't before. So I can think of a tremendous surge in Bitcoin and ETH, obviously. But on the other hand, if we now look at volatility, if we look what has happened in the past, let's say weeks, and how much do you have to pay for an option currently, then actually what you need to pay is actually more than the market is moving or has been moving in the past weeks. So the people are anticipating on this large move. So yeah, it can be expensive, but it's if you need to have your own vision about what will happen. We cannot tell anybody what will happen because we cannot guarantee anything. Options are expensive relatively at the moment. We see that out of the money calls, so there's more interest to buy upside opportunity than to trade downward opportunity. To trade out of the money puts. Everybody wants to own out of the money calls. That's also something. I don't know if you guys look at it, but we have a volatility service on our platform for BTC and ETH. And there you can see that the normal bathtub we see usually now has become something tilted. Like I want to own out of the money calls. It's so for me it's hard to say.
Do you think that the interest in out of the money calls is through enthusiasm or through necessity of short covering?
Enthusiasm.
Okay.
I think that many market makers have been selling out of the money calls.
Okay.
I don't have the data, but Amber Data is looking at gamma positions, and they look at retail gamma positions versus institutional gamma positions. And I personally think that's a very good indicator for what can happen in the market. Some people used to look at put call parity, and that doesn't say a thing for me. Or they say the open interest in out of the money calls is exploding. But I would like to see where is the open interest situated. So if it's with a market maker, if market makers are long options, they will also play around with the futures and to hedge them and to trade in small bandwidth to take profit there. And a retail trader doesn't do that. They let it run. So in my perception, if the professionals are long the options, then it will be a hard time to really move through it. But if they're short the options, then I think it will be much easier because the professional traders, they need to hedge their exposure on the upside. If crypto continues to go up, then these professional market makers, the only thing they can do is buy more futures to buy protection against the calls, the out of the money calls they are short. They need to do something with their protection.
And actually, interestingly, we're seeing high funding rates in the perpetuals and dated futures, and it seems to me quite thin markets in the futures as well, as if all the liquidity that's there is getting taken. Is that a correct perception, or am I imagining that?
Yeah, I think on our platform we have a zero-sum game. Not really, because some traders will trade futures on our platform against futures on another platform. But yes, there absolutely there is let's put it this way: the demand supply balance is a little bit disrupted, or it is tilted currently. But there's still sufficient supply. There's still sufficient demand. The only thing is you have to pay a little bit more for it if you want to own out-of-money calls.
And you're right. About the volatility surface being skewed to the call side quite heavily. Now, I think we've been used to always having a little bit of a skew to the call side, in whether that was the hodlers or people with the long-term vision, but it's really quite got distorted.
I mean, we had a bit of negative skew back in June, I think, May, June, as the market kind of got a bit tired. But ever since, I think it's been mostly positive.
Yeah. One other thing I'll just mention, I'll throw in there that I saw. I think I sent you the link to it yesterday. Maybe I saw the article on Coinbase where it said that for the first time ever, the options market was larger.
Than the futures
market. Which is normal for mature markets. So that's a sign of it's really coming into its own, I think. We knew it was going to happen at some point, right?
Yeah, options are immensely popular. And if you looked at, if you have a look at the traditional financial world, options is really, and especially the very short-term options, the zero DTE options. That means 0 days to expiry. So actually, it's a 1 day option or half-day option. I was a little bit surprised because for me, it's a little bit more. It's like a punt. Okay. I can pick, let's say for tomorrow, I think it will go up or I think it will go down, and I buy calls or I buy puts or I sell puts, whatever. But it's immensely popular, and I still remember from a few years ago that the CEO of Euronext in the Netherlands asked me, "What can we do to get more people involved in options?" And there are no youngsters anymore who are interested in options. They only want to do crypto. Well, there we are. We're now in the crypto option space, so even better. But still, it's interesting to see. And personally, I was a little bit surprised that options have become so immensely popular.
And you're right, because we see it across TradFi too. Options have exploded in popularity. And the interesting thing is it is these 0 day to expiration or these near-term expiry options, which is basically just a gamble. But I think, if you're buying something that expires in a few hours or tomorrow morning, you don't really need to worry about the Greeks so much. They're it's a pretty basic. It's up or down. It's sort of a gamble. But I think it's like a gateway drug, right? Where some of a certain percentage of those people are going to say, "Hey, there's more to this. There's more," and they'll start to learn more and expand and learn how to sell and employ strategies and so on and so forth.
So I used to work in designing and building gambling machines. Actually, originally for the Dutch market. My first job. And I learned in that business that simplicity is key. People who are wanting to gamble are looking for quick dopamine. And so the simpler the game, the better. So this 0 day to expiry or binary options, that kind of stuff, it's all very instantly gratifying. And I think that's why it's popular with young people.
I think, and we had an X space last week or something, and then I think when you start trading options, then you can do the 0 DTE, but you can also say, hey, but what's going on there in the monthly or in the quarterly options? You might get interested about the Greeks. You might start reading a bit about it. And you might see it, and that's where my love for options is coming from. It's actually a simple product. These are two simple products, but you can dive so deep into it, and you can philosophize so much about it. That's what I really like. Yeah.
We'll have to have him come down to Andorra here and sit around in our club, and we'll talk options for a night or two.
That'd be brilliant.
Sit around in your club. I would love to.
Yeah. We're not too far away. Just get in the car. You'll be here by 12 hours, I think, to drive down.
Okay. Yeah. Cool.
Because it's interesting the approach you're talking about, this visualizing the curves on the surface and imagining the prices move across that curve. That's pretty much how I see options. Whereas Shane's much more of a visceral trader type, so he'll go in and buy low, sell high.
Hopefully.
Well, ideally, yeah. But I always talk about options in terms of being the Lego bricks of finance, because you can build any structure you want out of options. I find them fascinating for that reason.
Yeah. It's sorry, I don't want to interrupt, but I see options as little characters, and every strike has a different characteristics. We also have Lazy Larry that doesn't work, or we have an explosive strike somewhere. So I have always been trying to see the impact, or to see which options will have which characteristics, which will suit the most to the strategy I would like to have.
Interesting.
Yeah.
Well, we're getting a little short on time, so let's cut to the chase and back to the Bitcoin Ethereum ETF news and potential approval. Well, I think it's I don't want to say it's guaranteed, but it seems like it's probably going to be guaranteed. Let's talk, for anyone watching, maybe let's talk about some strategies on how to play this, and maybe what your thoughts are on the best way to play this, not knowing what's going to happen. What would you do?
I think first you should define yourself. What is your vision, your view about the market? What will happen? So let's give an example. My view is the market will explode and volatility will explode. We're now trading, let's say, in the March options at 60% volatility at the money. I'm saying Bitcoin is going to 60K, 60,000 in the coming 6 to 8 weeks. Volatility will go to 100%. And now I'm going to structure my strategy or my position in options. So I can simply say, all right, I have one big BTC to invest. I can buy 6 times to 37,000 call. Because I know if that will happen, if we will go to 60K, I will earn approximately 5 BTC as a profit. But I can also look at 100,000 call. And you can simply say, yeah, but 100,000 call, we will never get there. No, we will never get there. But the 100,000 call will definitely increase in value if you're trading at 60,000 and volatility is at 100. Currently, the March 100,000 call is trading at 0.01. So for one Bitcoin, you can buy 100 of these options. And if tomorrow the price, or next week the price will go to 60K, 60,000, then you will make 20 BTC profit. And if we then say, yeah, okay, but it might take another 2 months before we know exactly what will happen and before the 60K will materialize, your profit will be less. But from the 37,000 call, you would still have a profit of 3 BTC, and 100,000 call will still give you a profit of 10 BTC. So it's combining stuff, and the 100,000 call, that one explodes, because if volatility goes up, that one will be relatively the most impacted. I don't want to talk about third order Greeks, etc. But you do have some options which are extremely cheap, but you know that if volatility will explode, they will guarantee a massive profit. So this is actually what I wanted to make clear is, if you buy an option, the market doesn't need to go to that strike. It's just think about what can happen, what will happen, and I can advise anyone, build an option model in Excel or in Google Sheets. It's easily done, and start playing with it. Start seeing what can happen, what are my scenarios, and which portfolio will suit me the best.
So you're saying that this is a market where perhaps you can make more money by playing Vega rather than Delta.
Not really, because if I have a view that the volatility will not go up further, then I need to think of a different strategy.
Sure. Yeah.
Then maybe I would sell some puts, or I prefer then selling put spreads, because I still am a little bit afraid that the market that we have this rumor and fact stuff again. But then I want to create another strategy. So each view you have will allow you or will necessitate you to have a different strategy and options.
And of course, the underlying theme is never risk everything on one bet.
Don't go all in. Never.
And I think a lot of people too might have the same viewpoint as you. They're like, you know what, we think there's going to be strength. They don't know how high it's going to go. But as long as you don't, if you buy that 100,000 call, if you hold it to expire and it expires less than 100,000, you're going to lose everything. But it's all about timing and direction when you're going long.
Yes.
And a lot of people get freaked out when they look at the March call and they think, oh my gosh, that's going to cost me so much. Well, you can do it as a debit spread. You can sell a call at a higher price to reduce the cost. It's going to cap your potential, earnings, but there are ways to reduce it. And that's the nice thing about options is there's kind of something for everyone in there. I don't know, Richard, do you want to give a prediction or a strategy on what you think?
Prediction, no.
Our predictions never work out very good, do they?
I'm the world's worst market predictor. That's why I trade vol.
Well, then you take the easy part, trading vol. Oh man, that's heavily complicated. Yeah. Okay.
Well, maybe if again, it seems like most people out there have the view, and we look at the volatility source. The view is that we're long term. We're probably going higher. How high we don't know. Is there another strategy you might be able to recommend for people?
Normally I'm a seller of risk reversals and a buyer of futures. But if you have a strong view about the market going up and you want to get leverage and you're fairly confident that the downside is limited, then actually buying risk reversals, it's going to be expensive a little bit. You're going to pay more for your calls than you're going to get for your puts, but at least then you can get into a long position sort of almost free with a bit of safety buffer. I mean, we're definitely going to. I mean, if vol does increase, it's not going to be all one directional, right? We're going to get big swings up and down on the way. So you want a bit of leeway there. So I'm quite a fan of risk reversals.
Okay,
as a strategy.
Buying the call, selling the put.
Yeah,
and using the puts to finance the purchase of the calls,
or at least partially finance.
Partially.
And if the market generally feels bullish, then actually you can kind of think, well, I can probably sell two puts to buy one call, and I can always roll the puts away. And if I'm wrong,
and we can always hedge off the futures too if things go awry, which we do all the time. So. Yeah. Well, I mean, there's no easy, we don't know where the market's going from day to day. No one does. All we can do is prepare and, try and sell high, buy low, sell high.
Well, the thing is that, everyone's saying the market's going up, which is never a good sign normally. No. But sometimes crowds are right? So who knows?
Yeah. For sure. Sometimes it does continue. And
I remember I was working for TD Waterhouse, working retail order flow, maybe 1998 or somewhere 97, 98. And I remember we'd get kids coming into the office, like off the street with the skateboards, looking to put some money, because it was the tech bubble at the time. Right. And he thought, oh boy, this has got to be the top. It's got to be the top.
Well, actually, that's one thing that makes me wonder whether this rally is real, which is that back in 2021, I was being asked by every single taxi driver how to get into crypto. And at the moment, no one's asking me. So actually, this little bubble we're seeing is actually only within crypto. The public aren't kind of aware of it yet. So, I mean, and maybe it fizzles out before the public become aware, and then, or maybe everyone piles in again, or maybe now everyone's so out of money and in debt with their mortgages that nobody can afford to get involved anyway.
And as Bruno mentioned at the beginning, if the ETF approval does go through, well, it might greenlight a lot of institutions to come on board.
Right.
So the retail crowd, you're right, they might be tapped out, and some of them will, but maybe it'll be the institutions driving the whole thing.
Definitely going to be people looking for store of value, and we could have a long discussion about whether Bitcoin or gold is the right choice, or both. But yeah, I guess it seems to me that
I think it's also a little bit of diversification, eh?
Yeah.
So I can imagine that some pension funds maybe say, okay, let's buy some ETFs, and so we can expect a big flow of money coming into the market. We can expect, but I'm not certain.
Almost by accident, you can imagine, just because somebody allocates 0.1%, and it's new money.
Yeah, and it doesn't seem to take a heck of a lot. Well, certainly not since the summer to move the market.
Yeah.
It was pretty quiet. So
I think it's been quite a short gamma market. Haven't dealers been short gamma pretty much for the year? So when the markets do move, they move quick. Yeah. I think we should do a piece on that for us.
Not always. In this summer, some market makers were stuffed as well, mainly in Ethereum.
Okay.
They were stuffed with a lot of options. They were long options. Nothing was happening.
So that's why realized vols fell off a cliff in ETH in the summer. Yeah. Okay.
Yeah, that's correct.
I think we saw 19 vol or something crazy. Almost like trading an index.
In the weekends, I've seen around 10% vol.
That's amazing. That's Dolly Yen territory. Interesting.
Fantastic. Well, I think we're pretty much out of time. This has been great. We've gone a full half hour.
Yeah.
Really great to have you on with us, Pirino. I know you're busy over there. I don't actually know what you do day to day as the head of options at Deribit. What does that entail, actually? That day to day work for you, or is it just drinking and chatting?
No. It's a lot of stuff. I look at the markets. I look at options. If clients have questions about option structures or some risk stuff, we will assist them as well. I'm also working on some development stuff. I'm myself trying to create volatility smiles for if there is a large market move, then usually the market is empty. We don't have very good prices at those times, so I'm working on that. But I also have the normal risk management things like overlooking open interest, what are stress test scenarios, all kinds of stuff. But luckily, also the very creative stuff, and that's what I actually like the most.
Are we able to blame you for the margin engine changes that happened 2 weeks ago that made us go crazy for 3 days?
Okay. Yeah, I was slightly involved.
I think it's always wise to listen when the exchange says you need to make more provision for risk. So
you know that we did that for a very obvious reason. We expect volatility as already materialized, the volatility to go up a little bit further, and towards the ETF approval, we want to create more room for margin, etc. Because we've seen on that Monday that what was it, 8% up and 8% down on a rumor. What if this rumor was true? Then 8% up, then 10% up, and another 10% up. We don't know, but we saw this swift move and had something like, wow, this can go fast, really fast.
It protects people, it does.
So when you have the mark vols on your in the center channel, the white channel on the options ladder. Is this a smile that you're publishing for the benefit of everybody?
If you need to have fair mark prices, and In the traditional financial business, you have clearinghouses.
Mhm.
So if an exchange says, yeah, that option has a value of 2, and I'm saying, no, it has a value of 5, yeah, then the exchange might say, yeah, but 2 weeks ago it traded at 2. So that's
Right.
last price, so we keep it at 2.
Yeah.
But that's not reasonable because we need to measure the fair price of an option against everybody's position.
Mhm.
So if there's a mistake, then we can say to somebody, well, you don't have enough equity because your option has not that much value.
Yeah.
Well, in reality, it does have that value.
Mhm.
So we need to be very careful in reflecting fair option prices or mark prices, we call it.
Okay, interesting. Thank you.
This has been great.
Great talk. Yeah.
Yeah, we're going to wind it down. So again, thanks everybody for joining us. You can of course watch the replay of this on YouTube on the roguetrader.academy channel. And next week we'll be back to our regular format where we're trading and charts and all that good stuff. And if this week ends up being like the last two, expect a bit of a wild ride. So anyways, thanks everyone for joining us, and we will see you next week. Thanks, Björn.
Okay, thank you. Bye-bye.